All right, guys, welcome back here. And in today's video, I want us to just take a look at a trade I took today on gold. And this trade is actually playing out as expected today. And I want to show you how you can repeat this time and again and again. But then let's go to my screen and I will show you all the lessons that there is for you to learn in this particular trade. Now, before taking this trade, I actually had a session with my community guys. We went through today's charts and then also expectations for today. And those of you who followed me yesterday on the live session, you know that I actually predicted the direction of gold. And then I don't only teach you, I also practice what I'm teaching. So coming to my screen right here, you can see this is the trade currently running. And before taking this trade, guys, I actually shared this trade in my community with the guys there. You can see I shared the trade here. This is the trade, and you can literally see that I said that the 15-minute time frame our trade is on. And I took the trade from there, but then it doesn't just happen like that. There was something that preceded this particular action. Now, coming here, I started from the higher time frame. I went to the weekly time frame to look at what is happening on the weekly time frame to establish my direction before taking the trade. So first thing you do if you're doing a top-down analysis is to understand what the higher time frame order flow is doing. Now, if you're able to establish that, you can get down to the lower time frame and make decisions like taking trade and also getting your point of interest for trade entry. So this is the weekly time frame. You can literally see that price is trading bullish. Nobody needs to tell you that. Everything here is indicative of the fact that price is bullish. What do you do when you see this? The first thing to do is to mark out your draw on liquidity. Draw on liquidity is simply where the liquidity pool is resting. All right. So where can you see the draw on liquidity? Here, above highs and below lows. So we have draw on liquidity here. That is the buy side liquidity on this side and the sell side liquidity on this side. Now, from what you see here, where can you see price is going to? Price is literally going to the buy side liquidity because we have had series of, buying pressure prior to that one. Now, the chances that price is going to go to the buy side liquidity is high because everything here is indicative of the fact that price is about to go into the buy side liquidity. And that is where I will get all my analysis from. All right. So the next thing to do is to go to the daily time frame. Going to the daily time frame now will help you to now micro view all you have there. You are going to see it in a micro perspective because the daily time frame is definitely lower or smaller than the weekly time frame. All right. So this is the daily time frame, and you can see that price has been bullish. How? We had a shift in market structure to the bullish side here, a break of structure to the bullish side here. So everything here is indicating price going bullish and the buying pressure is much. So this is a market structure shift. Now, what I have here is the movement that is trying to go into the buy side liquidity that I have there. But then that is not everything you have. You have to also get your dealing range. Now, for those of you who don't know what dealing range is a very simple perspective that will help you to get the exact sample of data you want to analyze to be able to trade. To know this in a very, very concise way, I've actually created a PDF material. It actually costs about $9.9, and many of the things I'm teaching you is well explained in this book. For those of you who have gotten the book, you can just write your testimonials or you can just write your experience with the book in the comments of this particular video. But then I want you to know that this book will help you to understand more of these things. So dealing range is well explained here, and it's basically where price is currently at between the swing high and the swing low. So what I have here, the swing low is here and the swing high is here. You can see that I have two bounds. This guy is here and the high is there. So this is the daily range I have currently. And what do you see? Price has traded from premium into discount, but then that's not the only thing I can see there. I have other things that I want to show you so that you don't get confused. If you look at this carefully, the more reason why I took the buy is because I have a bullish order block here, which is this sell candle. Can you see this sell candle? Where price traded into and tapped, and then we saw this rejection candle coming in massively. But then we also have an inversion fair value gap inside this guy. All right, even though this area did not touch it, but this price tapped into the inversion fair value gap and pushed up to that level. So this area becomes a very high probability area for price to go up. All right, so what do you do next? You go down to the 4-hour time frame and you will get the exact entry model you're looking for. Now, those of you who were here yesterday, I actually mentioned the fact that there was a fair value gap here prior to this analysis. There was a fair value gap here. I just want you to check my last live video. You will see how I explain this in detail. So this fair value gap is resting right here. Price traded into this area. We got a massive buy candles coming in. Is an indication that price is intending to go bullish. And today, being Monday, we had a gap. Price actually opened with a massive gap, which is indicative of the fact that there was an activity happening in the market during the weekend. So here is what I have on the 4-hour price trading into this fair value gap, filling it up. And on the 1-hour time frame, we have a shifting market structure, which is this one. Can you see everything I'm doing is in line with everything that you need to do before you take your trade? So price came back. We have a bullish mitigation block here. Price came back and tapped into that bullish mitigation block. And that is when I will make my decision for entry. Going down to the 15-minute time frame, that is where I got all the final confirmation for an entry. So the 15-minute time frame gave me the entry confirmation I actually taught you guys time and again. All right, here, a shifted market structure. But then to further confirm that this is good, I had to even go to the 5-minute time frame and get this correctly. So this is the 5-minute time frame. All right. On the 5-minute time frame, this area came in with a shifting market structure with such a massive displacement. And I looked down. There wasn't any reason for price to come down into this area because imbalances are the reason why price mostly retraces down into those areas. So my entry was here. Can you see it? So this type of entry is what I've explained in this same book I am telling you under the entry confirmation and entry models. You can see them. I've explained them in detail. If you want to get this book, make sure you check the description of this video. It costs $9.9 and get your own copy of the book. Very well explained. It's a PDF, not more than 62 pages. So look and see where price came and the trade. I went long from here, this fair value gap. That was how easy it was. You see, I took that trade and I was targeting the high here. All right, I was targeting this high. This is my target. But then, of course, trade management requires that you follow through everything that is happening. As it is currently, I'm at break even, and I've already told my community guys that I will be closing my trade in case I see some funny reaction. I said, I just break even my trade. I will monitor anything for any market structure shift on 5-minute time frame. If I see any, I will close my trade. All right, it's enough. If I see a shift in market structure here, something like this, it means price is going to come down. So I will close my trade here. All right. So that is how I took the trade. But if there is none, I will allow price to keep on going in my direction. That is how easy and simple it is to take trade using the smart money concept. If you want to join the community, you can let me know in the comments. And you can also reach out to me on WhatsApp. You can also find the link to joining the community. I have a free community in the description. Make sure you join the Telegram community, free for everybody. And I also have where community of members that are paid community, where I share those signals. You can reach out to us and then we can get you in. So thank you very much, guys, for watching. See you in my next video. Thank you.